Well, welcome back. You're with us, and we, of course, started Bazaar Morning Call earlier than usual at 7 o'clock. Actually, programming started, if you've been watching, since 6 in the morning, recapping all the developments which have happened since late last night. Let's now focus a little bit on the markets as well, because I think that is important. It's a constituency which is very much watching what's happening in terms of the escalation at the border. So I'll start with, of course, what we know officially with regards to confirmed information. So there is escalation. There is no two ways about it. India has shot down at least 40 to 45 drones which came in from the Pakistani side. There has been intense fire which has been exchanged between India and Pakistani forces. As reporters have told us since this morning, this AM, that so far things are calm. It looks like, fingers crossed, after what has happened last night, things have quietened down a little bit, maybe just for now. But that is the situation right now. We just spoke with a reporter from Jammu, etc., and that's essentially what they told us. There's nothing which is happening on some of the fronts which were targeted by Pakistan at this point in time. Okay, so that's the domestic front, which I think is the most important driver. But there's a lot of cues from overnight as well. So let's get to it. US equity markets higher. S&P was up about 0.6. Nasdaq was up about 1% or so. It was well advertised by the New York Times story. Trump announced a trade deal with the UK. And we got some specifics as well. And the sum and substance of it is that it is better than what was being expected in terms of this particular trade deal. Trump also, by the way, sounded optimistic on being able to do other deals. There is an article from New York Post which essentially says that the US is planning to slash China tariffs to as low as 50%, down from 145% as soon as next week. Now, Trump was asked this about, I think, 48 hours back, and he said, well, no, I will not. But this is what the New York Post is reporting, and many are saying, well, it'll be like a starting point. You give something for talks to start, because China has been adamant that they need to lower tariffs. And it's, they've been sort of treated very unfairly with this. So we'll see if this happens. But I think if this were to happen, it'll be seen as a big giveaway, much bigger than, the UK deal that we've seen last night. US-EU officials are reportedly talking now. I mean, the talks are on currently. US-China officials, of course, as we know, are meeting in Switzerland this weekend. And generally, last night, there was a bit of a risk-on sentiment. Actually, the S&P rallied quite hard. We got to about 5750 kind of levels, and then on the S&P, we cooled off a little bit and ended off the highs of the day. Risk-on sentiment essentially also meant that yields shot up. Actually, across the board, the 2-year, 5, 10, 30, very large moves. So the US 10-year was up 12 basis points to 4.4% last night. Oil prices, again, it's simply a manifestation of the risk on. Oil prices also went up about 3% to about $63 a barrel. So, it's a situation where we find ourselves global, actually quite constructive, quite positive. But of course, you've got local, the Pakistani issue, the Pakistani front, which I think is the big driver from here on. I just want to say, yesterday, we broke the low of 24,198 intraday. But the adjusted average close, we closed above it. So the big level on the Nifty is 24,198. A decisive close under it, I think, will mean perhaps more pressure. But more levels with Nigel. GIFT Nifty, I think, as we've been pointing out, is indicating a lower start. Nigel, what's on your radar?
Well, that's right. The GIFT Nifty is indicating a bit of a pullback. But in yesterday's trading session itself, we factored in some part of the bad news, according to me. So I think by the end of today, we could be higher than the lows that we saw in the first hour of trade. Now, India will emerge stronger, no doubt about it, as a nation as well as the market. And history suggests that stock markets do recover. Why did we decline so sharply in the final hour of trade? One was the India-Pakistan border tensions. The second factor was yesterday was weekly expiry. And that's why, in fact, there was an added element of volatility out there. Besides the money market weakness that we saw towards the end of trade, I think the most crucial factor you need to track from here on is the India VIX. Pull up the intraday chart out there. In the last 10 days or so, the India VIX actually has gone up by nearly around 18 to 20%. And that's the fear indicator that's the one that in fact has been spiking up. So just keep an eye out on the India VIX. As that starts cooling down will mean that actually the bulls believe that the worst is behind and we're looking ahead. Keep an eye out on that. That's the most important factor today. It'll start higher today yet again. But then, in fact, if it starts cooling down, means the market is gradually pricing in the worst. Moving to what history suggests. Well, history suggests that India-Pakistan combats actually, when history suggests that moving ahead, in fact, in the next 12 months or so, actually, Indian markets do outperform. And the FI flows as well, in 9 out of the 10 instances of the recent past, have indicated that the FI flows actually, they do continue. So we'll have to see how that goes this time around, because the FI flows have just returned. In the last 13 trading sessions, the Nifty actually has been consolidating in this 650-point band. That's because of the attack that we saw on April 22nd in Pahalgam. And from then onwards, we have been in this broad band. So there has been some consolidation that we've seen. The FI flows, yes, they're strong in the cash market. The problem is what's happening in the F&O market. And the sense you get is we are missing the FI net shorts in the system, because now the FIs are net long for the first time all the way since October 2024. Moving to the positioning, well, both the FIs, the highest long positions we have seen since October, the clients, the highest net short positions what we have seen all the way since October. So both of them actually have flipped it around. The options data comes up for you on the screen. 24,400 call continues to remain very, very active. Writing being seen out there. But the crucial one is the 24,000 put. There is still some writing being seen out there. The premium around 200 rupees, which gives you your near-term support. The lower end of the range is at around 23,800. I want to see that mark getting defended today. And the 20 DMA, both on the Nifty as well as the Nifty Bank, you want to protect it on a closing basis. As I said earlier, India is going to emerge stronger as a nation from here on. And also the equity markets, as history suggests, over the next 12 months or so, you do see a recovery. So we'll keep an eye on that front. A weak start, but I expect some kind of a recovery during the course of the day.
Okay, let's see how this progresses. A lot is going to depend on the official briefing that we're expecting from the MEA. That's when a lot of these stats and the latest on ground will become clear.